Today we are doing a long-term analysis of Bhel. Bhel was recommended 2 years ago at a price of 47. The stock was coming out of an accumulation zone on a monthly chart and the breakout had just begun. And if you see my post 2 years ago, this was the post in which I was asked opinion about three stocks. First was Tata Motors, second was Bhel, and third was IOC. So for Tata Motors, I had said that breakout has already begun. So this is in stage two and it is very risky when the breakout has already happened. You can see back to back 3 4 candles on a monthly basis. And for Bale, I had said that this is the out of these three stocks, Bale is the best to invest as the breakout has just begun and the risk reward is very favorable. And you can see from this level the stock went up to 90 also, so it was almost 100% within a year. Now let us today we will do the entire Elliott wave analysis of this stock. So let us start from the monthly chart. So if you see the long-term chart of this, price had given an impulsive move from 2000 to 2007, and once this breakdown happened on a monthly chart, the actual corrective period started. And you can see from 2008 2020 the stock was almost in a corrective period, and it is said that during corrective period the stock will always be, I mean, it's not wise to invest in the stock because you can see from last 11 13 years the stock had given negative returns only. Suppose you know all these, will you invest in such a stock that is in a correction? The answer is probably no. So this is how Elliott wave helps us to determine long-term trends. Now after this we expected three-wave correction. So this was, let me mark it quickly. So this was the first move down. So this should be followed by B, and you can see this is internally a B, and this pattern is nothing but a running flat. So if this is A, this is B, and this can be labeled as C. So after I mean, if you check the divergence on A and C, you can see there is clearly a divergence on monthly chart. So at this moment, we expected an upside in the price, and you can clearly see, if you once you got a breakout of this trend line on a monthly chart, you can see a fresh move has started on the upside. So let me now let us try to find this up move, how the move started and what was probably the reason. This stock was also recommended as a Diwali pick here at this level. The reason was simple because if you do a Fibonacci of this top, you can see it exactly gave, I mean, retraced back 61.8% of this last monthly swing, and at this we got a next bullish candle. So this was given as a Diwali pick for our Telegram members, stock market for beginners. And from this level also you can see back to back 4 5 bullish candles on a monthly chart. Now let us try to find what is how this move started and what are the future possibilities. Now if you draw a trend line on a monthly basis, and when I had said that whenever we get a trend line breakout, we can get when minimum three waves, and this is the first wave of that, which means this can be the first wave. This is the corrective structure, and one more possibility of, so that this top is broken again, and you can see this top is again broken in this. Now let us try to analyze this on a weekly basis. So on a weekly basis, you can see if you consider this as a first wave, and now let us compare the MACD. If you compare the MACD as of now, the there is still a divergence that is appearing. So as of now, we can say that this can be the last wave. However, this wave is not complete because if you see, I mean, this is the first wave of the next structure. Let me update this trend line. So now if you update this trend line here, you can see this is the first wave, this is the corrective structure, and this is one another wave. So between these two waves, as of now, we can see there is a divergence, but this wave is not complete, which means, why is this wave not complete? Because on completion, either we will get a strong, fast up move that will break this trend line, However, we are getting a slow move, which means one more possibility of this breaking this stop is very much possible. So now let us try to debug this on a lower chart. So you can see recently I had done a video short-term analysis of Bhel, and this was done. Let me show you. This was done 3 months ago. The price. Let us see the price. The price was around this. It had broken this trend line on a daily basis. The price was 73, and I had done this video. And from this, I had said that this is just the first wave, and now we are going to get a corrective structure and one more fall. And you can see from this level also the stock went as low as 67, which is again that we can again track how the correction happens on a lower chart, how it happens on a monthly basis, how can we catch the trend on an hourly chart. And all these things can be done very easily using wave analysis. And you can see from this level, if you mark the corrective structure, let me again mark. So this is the first wave. After that, we got a corrective structure. This is probably the corrective structure. And then you can see, let us go to the lower chart again. And then you can see 5 wave down. So at this moment, you can see probably if this is A, this is B, and this is C. So probably you can expect that after C, we are expected again, if you see one trend line, we are again expecting at least 3 waves to the top. So you can see this again gave a very fast move, and all these moves are tradable on a lower chart. You can see again here you got the first higher high. Again this stock went from 66 to 79, and all these things are tradable if you know the next possible wave. And from this again we are actually expecting minimum 3 waves. So if this is the first wave, this second wave will be down. So you can again trade this lower going wave, because if you see this pattern, this looks like a head and shoulders, and then if you consider this impulse correction and again fall, so all these are tradable if you know where the longer wave is going. So now for this impulse we got correction, and again one more push is coming to the top. Now let us go lower. So at this moment you can see, if you again draw this trend line, again we are expecting the third wave to this. So for this we are again expecting upside, which means again we have got the third wave. Now minimum 3 waves are expected, and we have got that. So this, if after this third wave can also clear this top, or this cannot clear it up, both things are possible. So we cannot comment much on this. So let us try to find the momentum of this wave on a lower chart, let's say 15 minutes. So as of now, if you see, let me so as of now, this wave is not over because there is no sell setup in it. And we cannot confirm whether this is ended here or not. So for whenever we are expecting an end, either a strong impulse to the downside will come, or we will get slow move. If we get a slow move, we are expecting more upside. And like I said, we are expecting this, even if it crosses this part, that is very much expected in the third wave. Now the question is whether this is going like this and clear this top also. So this is also one possibility, but that depends whether there is a divergence between this wave and this wave. If there is no divergence, then we will expect this to again clear this top also. If there is a divergence, then that will be particularly, then that will result, suppose on clearing this top, we get a divergence here, and that will mean that this is A, this is B, and this is C, and probably then this is the impulse, and we will expect one more fall to the ground. Suppose now when it crosses this top, there is no divergence, which means this structure changes to WXY, and then probably we can have one correction and one more push up. And in this way you can update your analysis, and all these things are very easy, and we have actually covered all these points in our Elliott wave series. So watch that series, and if you have any questions, please post them as a comment. And if all this delivers value, please consider subscribing, sharing, and liking. Thank you. And